Hey guys, hello, good afternoon, good morning, good night, depends on when you are. I haven't done one of these in quite some time. We're gonna basically plan the week ahead, mark out some levels. Uh, I have to really clean up my charts, especially Bitcoin. We hit a new all-time high, and I don't have anything basically prepared for except Friday's levels. Um, Sorry for taking such a long time to be ready on stream, to be honest. Prism, I formatted my PC recently, and Prism had a bunch of updates, and it was literally hogging my computer. Uh, Too many resources. It's still at like 90%, which is, a bit crazy. Um, anyway, I hope that when I switch to TradingView, we're gonna minimize it, so I think that should probably fix it. So, oops. Oh gosh. Quick break! Give me a second. In the meantime, let me just switch here. Alright, give me a second, guys. Just to clean that up. Okay. So, let me switch back here. I think we should really just do a clean chart, mark out some new levels, because even the things that I have are pretty old now. I do have some TA from way past when. Can't even tell anymore, to be honest. But we essentially have too many things that we have to worry about right now. So, let me minimize this. We don't need a task manager anymore. Oh, I should probably share the link, right? That makes sense. Give me a second. We'll be looking at the charts for the next hour or so. Okay. Gosh, I don't even know where to start. So we made a new all-time high. We are very close to a tier pocket projection that we had quite a long time ago. The objective was to reach 100,013. And man, we're pretty close, huh? 112. Then we got what was the all-time high? Let me check. 111,959. So yeah, we're pretty close. We essentially and eventually cleared all of the liquidity that I wanted it to clear. The reaction that we have now is typical case of weak ending. I don't think this retrace is that bad of a retrace. I wouldn't go into Monday thinking that we are obligated to go down. I didn't check my sound. Jesus. Let me just see. It should be okay. Yeah, right, it should be okay. At least it's monitoring, right? Okay, so let me just minimize this over here. So let's look at, we're technically in price discovery right now. So the only projection that I have is to, upon changing market structure on the daily, or upon reaching the TR pocket projection, I'll be looking for a scalp short. And what I mean by a scalp short is that for a very long time we're going to be bullish, right? For a very long time. Keep in mind that this can completely be a PO3, in which case this whole area would be our accumulation, with this being our manipulation. And so at least this being essentially the second deviation of this whole move, all of this being the distribution phase, or expansion in this case. Alright, so we're gonna be bullish for a while. The market is gonna feel like that for a while. And if this essentially develops into a classical Elliott wave, and it's gonna be even worse than that. However, worse, I mean good. However, we do have our classical three-stage expansion here, with basically phase 1, phase 2 over here, and now our final one. So in theory, we're bound for a distribution sooner or later. Now, in my eyes, I don't think the distribution has to go that deep. And I'll basically monitor each time that price comes into one of these boxes. And I'll be monitoring it with the idea of going higher, right? When we came to 108k, we talked, after a few weeks, we talked about the idea of coming to 76. This was essentially a level that we had, which had a CME gap to fill, that was required, so to speak, required to be filled. I can show you that just to keep on the same page, same logic. Alright, we had this was a CME gap from a weekend in November, from 8th to 10th of November, and basically this was the gap. Ooh, that was a weird glitch. Okay. And at the time, the objective was basically to fill the gap, come to these highs over here, and well, essentially, eventually bounce from there, right? So we were basically trying to set up longs each time it touched on these highs. So eventually, the better trade was when it came here, which also was an important volume profile level. Wait, give me a second. On the expansion and on the move down over there. So essentially, this was one of the volume gaps that we had there, together with one of the highs. That was we were looking for longs on the high that was included in the gap, and any of the subsequent highs after that. Anyway, keep in mind that the high that we just made on Binance is not as high as it is on the CME, and I always like to point this out because this is one of the reasons that I think we're going to go higher again. On the CME, we have not yet taken the all-time high. Okay, this is kind of equal lows. They're very stacked together. And important thing to note is that we don't really have weekend gaps to fill down here. All right. So the price action that you see, all of it is relevant. Okay. All of it is relevant. Which also means that in terms of looking for reactions, essentially all of the consolidations here are relevant. Okay. So in theory, levels that are really important in my eyes based on the CME is the volume profile of the lower consolidation that we have, which has the value area high at 88k, and on that note we also have a small order block zone over there. Okay, so that is a level. Looking in terms of volume, again, this consolidation, if you mark it from the weekend gap to the the level at which it breaks out of this area, if you mark it up until here, you're gonna see another area. So I can just copy this. You're gonna see another area here. And I don't like this as much because we have a lot of stacked lows here. But in any case, for scalps, this can work. So that is 96k, 780. And then obviously you have the most recent one until the moment of breakout, which is over there, which is about 105k. Okay, so these levels to me are the ones that I'll be looking into in terms of a continuation to make an all-time high, to take a new all-time high, to take out the current and most recent one. But also it's essentially because we are making equal highs here. Now, that being said, all of this will be done in my, and this is just me, you do however you want, but any trade that I take will always be decided based on reactions and never on any sure thing that I think will happen. Okay, because no matter how important these levels may be, I think this any of the liquidity that we have here, any of the consolidation levels that we have here, all of them can be very essentially swept, and only then make a new all-time high. So I'll be monitoring it in terms of the probability that I think that prices is bound to come to one of these consolidations now that we have 3 of them. And so, you know, your typical market maker model might happen very soon. So shorts is something to consider, targeting each of these consolidations every time, right? But after clearing liquidity and or having good reactions on the top of these consolidations, I'll also be looking to target the equal highs again, which would be a new all-time high on Binance, because Binance did take the high but not CME, right? So we took it here, but CME left it as is. So I'm not going to use any kind of fib levels here, to be honest. I don't think they will matter that much, especially considering that we have so the how should I say this? The areas that we have here are so clear, so easy to see. The consolidations are so easy to see that I really don't think that we should care about any Fibonacci level. All right. I do care about the TR pocket idea, but that is basically it. Which just reminds me, I don't think I checked the TR pocket on CME. Let me just see if we have any confluence here. Okay, not as good, I would say. You know, Binance really makes it kind of sexy, having the 618 deviation here on this block. And the CME, not much. Maybe the number 1 deviation? Oh, it's way down there. Never mind. So yeah, not as cool, I gotta say. But anyway, this would be 117 on the CME. Okay. So now let's look into a closer look. I don't really like these highs, even though this is a higher high. I think they're too close together. It's not that big of a selling tail, you know. So I really am interested in seeing what happens when price comes back here. On the 4-hour, I don't see anything, you know, that relevant except this small FVG here, which was not tested on the 4-hour, but that is essentially it. I'm not really sure if we should blindly short into this. Also, on Friday, sorry, this is Sunday. Where did Friday end? Alright, so on the weekend we basically took the low of Friday, which to me makes this basically useless information, because you know what happens in the weekend kind of stays in the weekend unless we leave a gap. So I'm not that interested, which means that Friday is gonna have like this tiny little gap probably. On the CME, this area is more interesting from the perspective of coming back to it and taking it, and that is all, to be honest. So places that I would like to look into. I see an inverted gap here. Might be interested in that because he has the range POC there. So that could be a continuation trade. On the CME again, let's see how it's looking. Oh yeah, it's terrible on Binance. But we do have a pivot point that could be taken out into a reaction of the range POC. That's an idea, right? Let me mark both. Okay, something like that. And yeah, that would be a second deviation. That's pretty okay. I like that. Where are you? Okay. So I like that. That's okay. Also like that TR pocket deviation. The 272 is on the FVG that I marked. It's also interesting. We could maybe do something on starting the week like that. I'll be monitoring that. Let me set an alert there. I would say this is only valid for Monday to Tuesday, so that we can basically do like a fake out of the week, right? That would be interesting, yeah. So I'm gonna keep this chart as is. That's an interesting idea. Let's see. Let me go on the 15, and let me take a look where the VWAPs are. Okay. Okay, previous day VWAP at 108.356. And also at 104, that's an interesting number. Okay, to the dot, curious. Also another one at another TR pocket, 105.754. Interesting confluences here. This would mean, let me clear this up. This would mean basically taking out this liquidity coming for VWAP and potentially moving up. We don't really have much here except for the 4-hour FVG, and that's it. It would mean clearing this liquidity as well, which could be interesting. Okay. But that is essentially it, guys. In terms of what I'll be looking for the start of the week, that would be it. I would like to take the all-time high again. But then I expect the distribution to start forming. At least to get into one of these boxes. Alright. Let's take a look at what would probably be the 382 reaction of this. So give me a second. I'm gonna select all of this and put it into a folder with today's thing, today's name. Why can't I fold it up? Okay, I can. Okay. So fib from the absolute low to the absolute top. 382 puts us at 97,633, which is nice because of the box that I drew, right? 702 puts us at the first consolidation that I marked as well. So those are two very interesting levels. Very interesting levels. I don't have the 236. Okay, the 236 would be a little bit below the range POC. I wouldn't be interested in that as much. It would put us deep into the volume profile there. For a continuation, I would like to see a reaction on the previous day tops. Unless it's a big buying tail touching the 236. So I know I said we wouldn't look at Fibonacci's because we don't really need to, since the consolidations are so visible, and well, I guess I'm proving my point, right? So 382 at an easy consolidation area, 702 at an easy to see consolidation area, and even the 236 at an easy to see consolidation area. I would actually even mark this out using the volume profile areas. Give me a second. I would even use it like that. Just using the volume profile there. This is the new week, right? It is, okay. I'm basically marking up the volume profile in up until kind of like the New York start of 19th of May. Okay. I think that's what really matters, to be honest. Like that. Yeah. It's the consolidation area plus since then that's the expansion. That's the expansion, and I don't think I would be that much interested in this in the levels of this expansion in terms of continuation to take the all-time high. So I think that's it. For Bitcoin, I think this is it. Let me grab a screenshot of this. Don't need that anymore. Let me use this as an overall view. Download. Now let me zoom in here. I can delete this box and that box just to not confuse people. And now let's go into the 4 hour just to take a better look here. This is maybe a bit too complicated, right? We don't need these levels over here. Let me see. And that, and okay, that's better, right? And maybe hide this one just for this image. Point out that this was previous all-time high not taken on CME, and point out that this is a 4 hour FVG. That's it. I think that's it. Alright. Download image. Oh. Yeah, or whatever. Yeah, okay. I think that's good enough. Now, next. Let's look at NAS. I don't have anything on NAS. Really have to clean this up as well. Except for the FEG that I was looking into last week. Nas, in my opinion, kind of has to come for this anchored view up. I'm just not sure if I would place my bets on that one or this one. Either from that low or from that low. In theory, maybe both are interesting. If I set it up as bullish, where does this put my second one? Ooh, like that. Targeting that block. Okay. About NAS. We don't really have as clear of a structure unless we consider that this needs another leg up, which obviously makes sense because that would be a new all-time high, right? So with it being a new all-time high, this would mean that now we would range here for a bit. So Monday would be kind of a fake out version, maybe take out the high but then move down a bit again, stuff like that. Range a little bit, kind of like here, and then have a final move up. So obviously this would be the target. This is the all-time high, which would mean that now either we find a trade based on this view up and this reaction, which is also valid in terms of the daily because it basically touched and reacted to a daily for value gap. This is marked out as the previous structure point, but if this is a 3-stage push, we don't need to come back here. This is done. We will probably not need this, but I'll keep it up. I'll keep them here. These were the vector inverted FVGs that I had marked out. Apart from that, I don't think I need anything that's here. Yeah. And also don't need those guys. Okay. So this would probably mean that inside this area we get something that pushes up further into making a new all-time high. So I wouldn't really be looking into anything else below us, because the idea would be to push from this previous day view up for the third push. So the idea is that this is the initial reversal. This area over here is our second consolidation area, okay? And this is in theory about to become the third consolidation area, which will help us push higher. By the way, the third, with this being our first, but I'm not gonna mark that. You get it, right? Just so that I don't have any more boxes up in there. So it'll probably be, considering that again, it'll probably be relevant to keep this guy. Let me put this without the bands. And let me go on replay here to try and perfect it a bit better. So let me put it on this guy. Get out replay. Okay. So now looking at the 4 hour, what do we have? Getting above this area is very important for us if we want another push up, because now it got respected. So ideally we want to see something that maybe takes internal liquidity inside the 4-hour time frame to push us up any further. All right, because if we don't, then that means that my idea of a 3-stage push into a new all-time high is probably wrong. All right, be versatile, don't take anything for granted. So one thing that I would like to see going into the 15-minute is price coming either here, or let me go into the 1-minute. Drawing a volume profile since the moment it breaks this low up into the New York session, which is when it breaks out of that area, and thus we get a range POC right on top of the previous day view up that we reacted from, and also is, you know, it's basically the range POC of this consolidation, which would be nice to come into. So these levels are essentially my points of interest. I like the inverted FVG just from the standpoint of taking this internal liquidities low, and then from there have a possible bullish reaction so that we can continue to start making bullish structure, getting above these highs. Getting above these highs would give us a lot of confidence into what would possibly be a move to the all-time high. This low is nice. I like that low. Bullish reaction. A lot of the POCs of these 15-minute candles is on the previous day view up, and they're on their lows, which is, it's nice. I think this is nice. Also, these highs over here pretty much stacked, right? This is a better high, for example, even though it's equal to that, but it's a better high taking all of this internal and then moving down. But this is too round for me to think this is a good high, you know? Kind of a personal preference into calling those ugly highs, but you get my picture. You get what I mean. And that would be it, essentially. Let me just double check that with levels that we might have. So to the bottom, I might mark these for the future, but I would be kind of disappointed if we come back to them this week already, because that would nullify my current idea for a final push. But we have naked POC and previous day view up inside one of the boxes, and then down here we have a lot of things. Oh look, the anchored view up is at the exact spot of a naked view up as well. But then we have several lows, several levels, sorry. Naked point of control here at 19k 426, and 2 naked view ups. This is too much into the future. So what I'm really interested in is coming back here, coming back there. This will probably serve for scalps, and then we would have the all-time high. Alright, so potentially let me zoom in. potentially something like this to take those guys, and then scalps here. Whatever happens here, we have no idea. Alright, but the idea would be eventually to get up there. This would be the bullish scenario in my case, in my opinion. I am expecting obviously a reaction at this naked view up, because that would mean to take out all of the liquidity from this past week, and you know that's bound to create some kind of a reaction. But and then after that we would have to see day by day, case by case. But I would have a lot of confidence that we do make a new all-time high if this sort of thing happens, right? So let me take a screenshot there to post. I would essentially, to be honest, be looking at only these two charts. I've been trading the dollar against the yen, and I'm just looking into a downtrend. It's nothing special. I don't think we have to complicate it as much. In my opinion, that if you're interested, I don't think a lot of people in our community are into this pair, into trading this pair. But what I've been looking into see happening is either have a reaction here for a scalp, but eventually taking out these equal candles on the daily chart, and upon taking them, maybe clear all of this. But that is a very big maybe, man, because something needs to happen for it to flip and take those highs. Something, I mean, in the markets, or in the general economy and how things are, because if not, I think we'll just continue going down. I don't have a lot of faith, right, in a bullish trend on this chart. I think this pretty much looks like a decent distribution, so I think these lows will be taken eventually. If we look at the CME version of this pair, you have to consider two things, which is on the CME you'll see the yen solely, so it basically inverts the chart. I can invert it for you if you want, but I think this is easy. You look at these lows over here, and it's an SFP, right? So inverting this chart, you would see these lows at the top, so they would be highs, and the ones that we're looking into are these two, and they are not even close to each other, right? So this is one of the reasons I think we're gonna take this 139.573. We're gonna take that level probably. I'm looking at the FXCM chart, but any Owanda chart, Pepperstone, whatever, will look like this with an SFP. I think so. I think I looked at this some time ago. Let me double check. Yeah, SFP. SFP. I think they all look the same. Let's, I don't know, Interactive Brokers. SFP. Yeah, you see. All of them just look like we're gonna take this again. Especially now because it's equal lows. But even if it weren't equal lows, I would be looking into taking them, because on the CME, where you do have an SFP into a change of structure, kind of an SFP, it's over here. And this low is the one which represents a high here. So basically, on the CME, you see that these two are not even close to each other, right? But on the CME, this is where liquidity was taken and shifted. I'll flip the charts. Maybe this is a bit hard for someone who is not used to this interaction. So, oh right, I forgot that now it flips everywhere. Let me do a double screen setup. Okay, so let me put it up so that we're looking at the same things. Same areas, I mean. But this one we're gonna invert it, alright? I'm not sure if you can understand the relationship here. So like this, the charts are this one is not inverted and this one is inverted. And what you're seeing is that here you have an SFP, but here these lows are ascending. Alright? And here the first high, you see the cursor, it aligns on both charts, okay? So here this high is higher, but here it's lower, okay? And this is basically the difference that you have between two charts, which is one of the reasons that I think we're gonna take this low, which represents this low, which in turn will probably take 139.573. Because when we got up here on the CME and when we flipped here, not only did we have a bearish market structure or change of character, whatever you like to call it, but also we came into this consolidation area and reacted bearishly from it, and we're continuing the downtrend, which makes total sense into taking this low, because on the CME it's not an SFP, right? On the CME this SFP, sorry, on the FXCM chart this would be a bullish reaction, but then we didn't even take a new high. Okay, so yeah, this makes me think that we're going down. Essentially, I'm taking each session as usual with my normal strategy, but I'm always preferring longer shorts. I might scalp, I might do a scalp long, but I'm looking into bigger trades if they are shorts, because I'm always hoping to take this low. What else? I think this is it, guys. I haven't been trading gold at all. I had the idea of us taking this high again, and I think we probably will, because we came into this area here with a very bullish reaction, so I don't really have a reason to think that we are not going to go back to 3,435. I think we will, and that is essentially it. Every New York session open been doing the strategy, and I would be looking into continuing doing that even on gold, also preferring bigger trades if they are longs, kind of the opposite of the dollar against the yen. But that would be it. I can take a look on the 15-minute to see if we have something similar to bounce from. What I immediately see is this consolidation here. Easy to spot, right? So this is a level of interest. We don't have any levels there. There's no VWAP or something like that. The closest naked VWAP that we have is 3247. Range profile of that would be with the value area high a little bit lower than that, not too much. And that would be the max that I would accept it to go. But I wouldn't be looking into that, to be honest. I don't think we have to go into that. It's one of those things again. If we're bullish, I think we can bounce from something pretty soon. And oh my gosh, do these highs look ugly or what? So let's look into the beginning of the week. Oh, this is all Thursday. All right. Okay, let me set it up to where it breaks out of the consolidation. So let's do this. All right, value area high over there. This would be the maximum that I would accept if I want a long to take. Which one was it that I was saying? A 3435. 3435. So yeah, I would be wanting, at most I would like price to come sorry, at the lowest I would want price to come here and not lower than that. Coming into this, I think it's already bad, because kind of like Nasdaq, first consolidation, second consolidation, and now we want the third one to go higher. Makes sense, right? It's kind of the same. It's kind of the same logic. Yeah, we didn't touch the volume profile over there. Let me see the CME. Let's see if it's the same. Yeah, we didn't touch it yet. The POC of the whole expansion is over there. Yeah, I would like price to come here and not much lower than that. If it comes lower. Wouldn't be surprised if we see like a reaction from something smaller. Smaller as in not a big consolidation and continue going up. Let me see. Yeah, on the daily this is a singular order block. Pretty much good enough. If we create displacement from here, all-time high seems easy. So opening up the market, ideally if we come inside like the value area high of this and push higher, that's perfect. Beginning of the week with a smaller move down in order to create our second displacement, right? This is the first displacement and breakout of this area, and this would be moving down a bit and then displacing up would be the second move. That would be it. I don't think we need to complicate on gold. That would be essentially it. So yes, guys, if you have any questions, oh, let me take a picture of that. If you have any questions, put them up on Discord. Let me move this VWAP over here to that high. That's really nice, isn't it? Price bouncing away from that. And what's the lowest? Right. Seems nice. This bounce here was really cool. And if I set from the most recent low, puts it at very close to one of the boxes. Yeah, this would be a great level to. I think this would be a great level to long from. Let's see what happens when it gets there. I'm being overly cautious. Like each time that I look at trades, I'm being more and more cautious. Just waiting for the reaction, especially if we're on the New York Open. And things have been going well when I do that. Speaking of which, my challenge is okay-ish. I had a very bad month, or like 2 or 3 weeks in a row that were really bad. I'm currently in like 6? No, sorry, about 5% up on the account, which is terrible. It's embarrassing, to be honest. I guess I should be glad to not be in drawdown, but not being drawdown is something that is, it's expected for someone who has been trading for a long time already. So only being in like 5% profit is kind of embarrassing, to be honest. I know I should be happy, but it's kind of embarrassing. In any case, I already looked up into several of the trades, and basically, very basically, I just have to lose some habits. Because of the lack of time, I've been doing some trades in a non-optimal setting, like when working, when driving, not having a clear setup or the possibility of using the whole desk to look at things in a much calmer environment and just conditions, right? And basically, when I did that is when I went into drawdown. Uh, because even some of the trades, sorry, even some of the trades were actually pretty good, but I didn't manage them in time, which made a good trade become a bad trade because I wasn't paying attention, for example, when it took external liquidity, so then it reversed or gave me basically a break even. And then after things like that, I tried to re-enter trades, and basically I destroyed the potential of the account by doing that. I think even if I do less trades, like a lot less trades, essentially just trading the New York Open with you guys, with the premium live trade sessions, I'll be doing less trades and moving potentially a bit slower than I would if I would be trading like 8 hours a day, but at the same time I'll have less potential for drawdown and bad trades, which essentially compensates and makes me actually move faster. But I'm just being impatient, which is something that I said I wouldn't do, right? Funny. But yeah, I'm essentially being patient, and what's saving me from being in a bad spot is that I'm risk managing well. If I wasn't like properly sizing positions and everything, oh man, this challenge would be lost already, to be honest. So yeah, I guess that will be it essentially. I'm gonna make a post marking out the pointing out the levels that we just looked at, looking into the trades that I think are relevant to start the week on. And that is it. If you guys have any questions, put them up on Discord. And I think that's it. I don't know if I'm forgetting anything. If I do, or if you need anything, just ask on Discord. I'll try to answer when possible. That is it, guys. So I'll see you later. I hope you guys have a nice day. Hope you guys have a nice weekend. And yeah, I'll see you around. Right, cool. Cheers. Bye bye.